Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal. This is our Saturday weekly wrap-up. I'm going to go over with you what our algorithms are saying about the stock market and what we think is going to happen next week, so we're all prepared. There's going to be some changes for sure. We're going to then really drill down into specific stocks. I'm going to share with you a list of stocks that are at the top of our watch list and or already in our portfolios, so you can order your thinking and do your own due diligence this week. I'm going to focus some time on precious metals because I think we really have to continue to understand what's happening between now and late June and what it could do to prices there. And then we'll wrap up and take questions. Okay, so let me remind you, the ARMR Report, it stands for Algorithmic Risk Management Research. So what we try to do here is begin and end every decision about investing by thinking by really thinking through whether or not we're on the right side of probabilities when reward is worth the risk. Now, how do we do that? The ARMR Investing Way is a three-stage process. We build our whiteboard of investing ideas. That's where we're constantly doing research and refining what our favorite names are that are lifted to the top of the shelf. Then we use ARMR algorithms, right? There are proprietary algorithms we've written to help us understand when to commit capital to the market, when to protect capital in a difficult market, okay? And of course, we have those algorithms written for individual stock selection and group selection. And the third stage that wraps it all up is a tight stop-loss discipline that we follow. Okay, and those three stages together, something I've developed over 30 years of doing this, is what I'm trying to share with you to help you think through the process of what is a very difficult market, and it's not going to get any easier, right? This is a mechanical bull market. I like to call it a mechanical bull market, and I'll go over why with you. Now, before I do, don't forget you can subscribe right down here to this YouTube channel. You can also subscribe to the ARMR Report. You can just click on those links, take a peek, see if you like it. And don't forget, hit that like button, right? Help me out. Like button on YouTube raises the profile. And then we get to, as we build our ARMR community, what I like to say for ARMR insiders, our subscribers, is that we're an army of analysts backed up by a tank division of algorithms. Okay, and that's how we build net worth together. Don't forget, I'm sharing with you information that I use in my own personal portfolio. Okay, so I'm not telling you what stocks to buy. I don't know you. I couldn't possibly say go buy X because I don't know your risk tolerance or what your goals are. But we're going to go through stock patterns, stock charts, stock fundamentals today, and these are all of the things I do to position my own personal capital. Again, something I've been doing for over 30 years for myself and for investors. So sharing the thoughts with you. Okay. Let's dive in. I want to try to tighten this up as much as I can and then get to your questions. Let's dive in first with a discussion of the stock market. So last week on this show, I was talking to you about how the Risk Monitor, right? We have 7, now 8 indexes that we follow using our strategies and our algorithms. And we call this the Risk Monitor. And the Risk Monitor has 3 simple colors: red, yellow, green. The whole point of the ARMR Report is to take all of this information, fundamental, technical, algorithms, gamma information, and try to put it together for individual investors, which is yourselves, in a way where it's easy to understand and easy to execute. So let's always try to talk about, this is what's happening, how do we execute? This is what's happening, how do we execute? So last week, I told you that the week prior to that, which is 2 weeks ago, we were building up our exposure to the stock market in the ARMR Swing and the ARMR Invest portfolios. And I shared with you that while we were Risk Monitor red, we think we're about to change color. So we preempted that change. This past week, and I shared with you last Saturday that we were loading up our portfolio in NASDAQ 100 names because that was the lagging index that had just given us a risk on entry point using our algorithms. And it had changed the risk monitor from red to yellow. On Monday, we saw that move higher and it flipped the risk monitor to green by Tuesday because we also had the ARK Innovator Fund / IBD 50 Innovator Stocks giving us the same risk on signal. So last week was the week where the ARMR Investing Way states that when you have confluence across the board in indexes, that's when you have your highest probability of success putting capital to work. And you want to put as much capital to work following the ARMR Investing Way, which is what I do personally, as close to that entry point as possible. It's true. It's just probabilities. So there's going to be a couple times out of 10 where we lose money. That's okay. We try to get in as close to the stop. And if the stops are hit, we take our positions off and we lose some money. We go back to cash. But if we get out of the week, if we get out of the first 5 days of that new risk on entry point with the market intact and the weekly candle strong, then the probabilities get even higher that there's going to be a push in the market that allows our net worth to go up. How meaningful, we don't know. Okay, I don't predict how long the rally is going to be, where it's going to stop. I don't play that game. Even guys who get it right for a while eventually have, every hero has clay feet. So what I try to do is I say, look, the algorithms are telling us probabilities are at their highest. We put capital to work, we follow stop losses, and we see how far we're going to go. I don't know when it's going to end. Some people predict next week. I don't know. And they don't know either. And they might be right for a short period of time. And then the markets constantly change. That's why most heroes have clay feet. They're right in a certain environment. Then the environment changes. They're still stuck to their old ways and they completely miss the movement. So at the ARMR report, the idea is to read and react to what we're getting. Do your fundamentals, read the price action and react to it. Follow stops to protect yourself. So what happened last week, just to wrap up this segment on the big indexes, this is the S&P. We've been talking about this Andrews fork for a long time. For those of you who follow the ARMR report, you know what I'm saying. Back here was the bottom of the pandemic. That's the uptrend and the middle of the Andrews fork. We've been trading down towards the bottom of the fork. And for a while there, this yellow ascending pennant is usually a negative. So we said, okay, look, right here, we got risk off in the whole market, right in here, as it challenged that level. But then it immediately reversed and we went risk monitor yellow. Okay, this week we went risk monitor green. You can see why. The S&P is breaking out above that ascending pennant. So we can get rid of that now. I'm not concerned about that now. And what I'm looking for now is a move to the top of this trend line. And if we're lucky, a move to the very top of the Andrews fork. Okay, if we got an acceleration like that, which is incredible, that would take us up to, something like 460 on the SPY, up from, really the breakout was originally 400. So that would be a pretty significant move, right? 440 would be 10%, so was it something like anywhere between 10 and 20%, let's say a big window off of this breakout. And that could be the blow off top. I don't know. I don't care. I'm not trying to guess tops. What I am saying is we focused on the NASDAQ 100 last week because we got the risk on entry point right here. This is what I was sharing with you guys last Saturday. The time is now to focus on NASDAQ 100 stocks. We made a higher low at the 50-day after a 12.5% correction from high to low. That was the entry. Okay? So what's going to happen next week? The ARMR Investing Way is to have a 5-day window when all indexes are telling you the same thing, confluence, put capital to work. Then next week, we go back to Risk Monitor yellow. Yellow means that we're managing success. I'm not trying to put more and more beta in the portfolio at that point. I'm not buying more and more names. We're already fully invested. We were fully invested 2 weeks ago. Last week, we tweaked the portfolio to shift it more towards NASDAQ 100 and some of the innovator type names. I'll share with you what they are in a second. We're going to go over charts right now, and you can see what stocks we're buying. You might want to grab a pen and a piece of paper so you can see what we're doing, and then go do your own due diligence, your own research. Okay? But the shift last week allowed us to increase the beta in our portfolio. So what I mean by that is, for those of you who are new to building portfolios and investing, a portfolio manager is about managing risk. It's the difference between a professional investor and an individual. I would say there's two major differences. One, the professional is always thinking about managing risk, whereas the individual is thinking about how much risk can I take on. Okay? And two, the professional is all about following stop losses so that your emotions and your ego don't get in the way. And I think individuals tend to forget that, and they start to force their will on the market. Those are the two big differences. And it's not just professionals or individuals. I shouldn't call it that. Successful investors versus unsuccessful investors. There's a lot of individuals who are great, successful investors. And I submit to you that if you ask them, if you witness what they do, the two things that separate a successful investor from an unsuccessful investor is managing risk and following a stop loss discipline to get rid of emotion. So one way to manage risk is to allocate your portfolio correctly. Look at the dollars you're managing. $1 million portfolio, I might have 15% precious metals, 30% industrials, 30% NASDAQ 100, right? So what's that? 60, 70, right? So now we've got 30% left. I might break that into 15% innovators, and then another 15% I'd like to have in cannabis. It's just not ready right now. Okay? But that other 15%, you would determine how much more beta you want in your portfolio. So you might bump up innovators, you might bump up NASDAQ 100, or you might be a more conservative investor and you take that 15% and you buy dividend stocks. You own your AT&T and Verizons and those types of names. Okay? So it's portfolio structure that helps manage your risk. So last week when we saw confluence everywhere and Risk Monitor green, I said, okay, I want to bump up my beta and I want to take that extra 30% of the portfolio and move towards higher beta names. Okay? So one of the reasons why I'm willing to do that is that not only did we have NASDAQ 100 last Saturday, I was saying to you, got to own NASDAQ 100 names coming into the new week. Okay? This week, what we had was a risk-on entry point in the ARC Innovator type of funds. Double bottom at the 200-day moving average. It hasn't even broken out yet, right? So what we're looking for next week is acceleration up in innovator type of names. And let's just take a look at the IBD 50 because that's the same type of feel. Now look at that. Actually, the IBD 50 is a stronger index right now. It never touched the 200-day. It's already above the 50-day. Okay? So I'm going to break down for you right now. We're going to go through charts. Let's start by looking at some of the bigger cap names, and then we'll get to the innovator type of names that have yet to break out or are just starting to break out. It's very hard when you have a whiteboard to figure out where to go with capital. You can't own everything. So you have to figure out position size and then where do you want to go. I can't tell you your position size. You have to figure that out yourself. Some portfolios I manage, every position's 3%. So I have 3% positions across the board. Others, it could be 5%. And in rare cases, I have 10%. So I only have 10 stocks in the portfolio. You know, it really just depends. I'm most comfortable right now at 3% because I've got so many ideas coming out. There's a lot of names I want to own, and I want to reduce my single stock risk. I really hate to get the market call right and put too much money in any one group or any one stock that goes down because I got that group wrong while the whole market goes up. I can't stand that. So right now when we have confluence, what I want to do is own a bunch of these names and stop out the ones that lose money and ride the winners. Okay. And so I'm kind of spreading out right now, right around 3%. But then I'll tend to put 5%ers in there. You know, so what are some of my 5%ers? Let's go look at the top names in our portfolio. Okay, we bought Facebook a while ago, right in here. So what I wanted to share with you is a thought of how do you pick and choose off of your whiteboard. The number one way I do it is relative strength, and it's not just a number or relative strength line. It's literally relative strength versus the market versus other stocks that I'm looking at. So the simplest way to understand relative strength is to say which stocks are trading above the 50-day and above the 200-day moving average and which are not. If at the beginning of a new risk on entry point, I want the stocks trading above the 50, above the 200, making a double bottom above the 200. As you can see here, this green line's the 200-day. So there's a double bottom here. The black line's the 50-day. So we were buying Facebook right in here, and it's leading the market. Okay? You want to look for pennant formations. Let me go over 3 chart patterns that really work for me. And you've heard about these, but I want to break it down for you in easy to understand, simple to execute. Why do we even bother looking at chart patterns? It's not, some type of crystal ball, some type of mystery. I know a lot of people that scoff at technical analysis. They think it's ridiculous. I submit to those poor souls that they're completely missing the point. It's not about drawing something on a chart. Price charts are about understanding where the battle lines are drawn between the buyers and the sellers. That's all we're doing. Where are the battle lines drawn? So a price chart like a pennant, which we're going to look at here, every time Facebook rallied up to this downtrend line, the sellers were in control and they would start dumping stock, okay? And they would keep beating back the buying army. And it kept making new lows until right in here. Okay? This was the key right here. This is what really woke me up to, we have to pay attention to Facebook. Because right here, we saw Facebook make a higher low at the 200-day moving average. What that means is the buyers are so excited about the stock that they're not going to even let it go down to the prior low. They're going to start buying now. And so right here, when it broke above the downtrend, what that tells you is the buying army is about to rout the sellers. The sellers are out of ammunition. That's what chart patterns are all about. When are the buyers or sellers out of ammunition and the army is going to come out of the trench and run them? That's the question. So my favorite pattern is a chart is a pennant formation. Because it's so clear the sellers are here, the buyers are coming in. There's a point at which the battle is about to be won, and then you get an explosive move off of it. Let's take a look at Microsoft. Okay, same type of pattern in Microsoft. And we owned Microsoft in here. It pulled back. It held the 50-day. Notice how it's not even near the 200. So from a relative strength standpoint, you could see how much stronger Microsoft was than any of its peers in the NASDAQ 100. Holding the 50, pennant breakout. Now you're making higher lows. So again, you could draw that pennant one more time. Right? And you can see now the buyers are really in control. The sellers have no ammo, and we blow out to new highs. Could I own Apple? Sure. People ask me about Apple. I sure could. Okay. And Apple's starting to come on, but look how it's lagging Microsoft and Facebook. Way behind. This is just the first week it started to come up. And what that tells me is Apple is just a market stock right now. It's going up because the market, we got a risk-on buy signal in the NASDAQ 100, and so the stock is going up with the whole market. But the leaders, Microsoft, Facebook, those are the stocks we want to try to focus on, okay? Even Google, which I don't own, but Google is an unreal chart, okay? So now you can see what I'm talking about. I mean, this thing barely even pulled back with the whole market dropped 12.5%, the NASDAQ 100, and this stock doesn't even go below the 50. That's a sick chart pattern. So now let's drill down into what did we add last week that are innovator type of stocks, right? Because that's the new index that's about to go. So if this bull market is going to accelerate, I submit to you that it's not going to do it without the innovators coming on for the ride. So here are the innovator names that we're focused on, all right? When you look at Google, the fundamental story in Google is a paradigmatic shift in ad spending and revenue, the way ads are delivered. Higher ROI, higher margins for Google. So on our whiteboard are companies that are maximizing that change in the ad business, both by selling the ad space like Google and companies who are taking advantage of the higher return on investment that they see from this new ad shift. Okay. So our top names that are innovator names, I didn't buy Google because in my opinion, if Google is blowing out on that, I'd rather own Pinterest. Okay. And so we pick up Pinterest, which is clearly an innovator name, right as it pops above the 50-day moving average. You could see what we're doing there. Made a higher low, didn't go down to the 200-day. So when I'm trying to identify innovator names that have higher relative strength, you can see the ARK Innovator Fund, for instance, making a double bottom touching the 200-day moving average. Pinterest never went to the 200-day, and it pops above the 50 after a quick double bottom. That was the entry point. How about Twitter? Twitter is even stronger. Now, this is one of my favorite patterns. Okay? One of my favorite patterns. It's a 5-wave rectangle over a long period of time. So it's a huge base. You get the blowout on earnings explosiveness, right? And then what we do is we look to buy the first test of the 50-day moving average. It comes down to the black line, comes down, makes a double bottom, makes a lower low actually, but immediately recaptures the 50, and we put the position on right here. Okay? The next morning we put it on, and the stock is starting to move. All right? Here's another name that fits the bill. Oops. Here you go. Okay, Etsy. These are companies that are benefiting from the ads, the new ad paradigm. Okay, and what I want to share with you now, 5 chart patterns that are, in my opinion, almost identical. They are explosive patterns. That doesn't mean they have to explode to the upside. Okay, they could break down, it could get ugly. So we have to use stops. But these are the patterns I want to focus on if I want to increase beta in my portfolio. All right. So we look at Etsy. This is a pennant formation right at the 50, double bottom, higher low, clear relative strength versus other innovator type names. If this thing can get out above the downtrend line, we don't know if it will. If it does, it should be able to put on some legs. Pennant formations, when they break hard. So if this reverses and goes down, it'll implode. Okay. But if it takes out the downtrend, telling you that the sellers are out of ammunition, then the buying route begins and the asset explodes. So grab your pen, piece of paper. We got 5 chart patterns that look like this. Do your own due diligence. I'm not telling you what to buy. I don't know your risk tolerance. but here are 5 patterns that fit the potential for explosive movement. If we marry that with a stop loss discipline, then we're following rule number 1 of the ARMR investing way. Put yourself on the right side of probability when reward is worth risk. Reward is worth risk. The stop is our risk, so we know what we're going to lose. So we got to focus on names that can explode higher so that the reward is worth the effort. And that's what these 5 chart patterns are to me, okay? So there's Etsy, number 1. There's Digital Turbine, number 2. Notice how similar these patterns are. Apps. Okay? These are not out yet. I don't know how these things are going to perform. I'm giving you some clues of what we're doing in our portfolios, and if they break out, things could get interesting. Okay? Silvergate just peaked out above it at the end of the day Friday. SI, perfect pattern. You're curious what this pattern looks like? Here's an example of one that's already blown out, right? Blew out, pulled back, consolidated, and this is Mara, okay? These 2 guys are in the same business. These are Bitcoin / crypto plays, right? There's SI. So I'm not a buyer of Mara. I'm not saying that. It's already broken out. What are the 5 names? SI, Apps, Etsy, ready for this? Actually, I'm going to do this one last. I'm going to share this one. A company called KOPN, KOPN. Funny story here on KOPN. Okay, fundamentally, this is no joke. I mean, this is a funny story, but this is not a joke. I have literally been following this company since 1994. I met the CEO of this company in 1994 at a conference in Monterey, California. He's a great guy. I can't believe he's still running the business. Very intelligent guy. 300 patents to his name. All having to do with, the best way to explain it, if you're familiar with the Microsoft HoloLens, you put on glasses and you can see in your glass augmented reality. This guy was talking about that in 1994. So talk about being ahead of his time. I mean, you can't be more ahead of your time, right? But maybe his time is now. Microsoft announced, I think it was last week, that they've been in a prototype discussion with the military about the HoloLens, and that's moving from prototype to production. Okay? What's compelling to me about KOPN is that they've got the technology. They're not working with Microsoft. They have other military prototype businesses they're involved in. You got to do your own research on this thing to learn about it. Okay, I can't spend the whole time discussing it right now. But suffice it to say, I'm focused here on the stock because of this chart pattern, and I wonder if his vision of 30 plus years ago, it came public in 1992, is about to be realized. And that chart pattern tells me I need to pay attention to the stock. All right. Now, let's wrap up with a couple of thoughts. I'm going to roll over to the 5th stock. You ready for this? I am looking every single day. I am looking to put capital back into the cannabis space. You all know, okay, that we have been out of cannabis for a couple of weeks. I wonder if this is a green shoot, unintended. Look at the price chart on grow generation. Classic pennant formation at the 50-day moving averages. If this stock takes out the high of Thursday, I'll be long the stock. The rest of the group looks terrible. That's just the way it is. MSOS, it broke down, pulled back. But who knows? Is this the beginning of a bottom, a higher low? And the lead indicator is GrowGen? It's possible. If GrowGen breaks out, I might put a position on MSOS. If GrowGen breaks out next week, I might put on a position in MSOS. Because that could be the green shoot, the beginning of buying that comes back into the space after a much needed and deserved correction. The stocks ran away, had a huge run. We made a lot of money at the ARMR report. I hope you were doing it with us. We bought it in here, skyrocketed. We sold it right in here. Okay. Cratered. We're looking for an entry point. I don't know if this looks like a head and shoulders breakdown, but at the same time, we can easily go like this. Okay. And we could say that as long as those lows hold, this could just be a big consolidation pattern. And theoretically, what you're looking at is a downtrend, I don't know, something like that. Okay, let's take this right out to here. Whoops. Okay. So what we're looking for is for these lows to hold and for a breaking out of the downtrend. So you heard it here first on the ARMR report. If we see GrowGen break out of this pattern, okay, which is a big percentage of MSOS, then we may be putting our initial position size on MSOS next week, along with GrowGen. And we'll see if we make money, and we'll use our stops. Interesting to note that, the leadership name in the space for US MSOs to me has always been TrueLeave. And TrueLeave just did their capital raise, right? So they just raised a whole bunch of capital. So one of the reasons the leader is down here is because they did a capital raise. That's, at the end of the day, that's not a bad thing. So, they did something that was dilutive, and they sold a bunch of stock and raised capital. That's okay. They're going to go use that stock, make some acquisitions. Things could get very interesting in the space. Okay. So my eyes are on MSOS and GrowGen to see if it's time to put money back in cannabis. Now, let's just wrap up real quick with precious metals, and I'll get to your Q&A. Don't forget, hit the like button for me. All right, guys. If you like this, it helps me out. Bang away. And at the same time, subscribe. Right down here, you can subscribe to this YouTube channel. I try to do some updates during the week now. Okay. And I kind of do them in the last second. I just say, okay, I'm going to share it with all you guys, right? I do 2 videos a day that are exclusive to ARMR Insiders. The morning call at 8:30 in the morning and the 2:30 in-game update. And sometimes I'm sharing it with all of you on YouTube. So if you subscribe, you'll get an alert that we're doing it and you won't miss them. Okay? So consider doing that. I want to wrap up with gold. Simple price charts. I don't want to get too lost in the weeds, but I wanted to share something important with you. This is GLD, okay? This is May of 2019, okay? The futures open interest right now, right on this uptrend line, okay, is at the lowest level we've seen since May of 2019, which was right at the beginning of this major uptrend. So there's three things I wanted to share with you. Number one, we're right on this long-term uptrend in gold. Number two, we're in a position in the futures market that was the beginning of this big move, right? So all of this, it appears as if all of the selling and suppression is over for now. And number three, that makes sense, right? So we have a narrative and we start to look for confirmation of the narrative or destruction of the narrative. I've been telling you guys for a couple of weeks now. Late June, Basel III goes into effect where gold has 100% release on its tier 1 asset. Okay? That means banks who are holding gold are allowed to match that against their reserve requirements. Okay? You have to have a certain amount of reserves as a bank, and you can only hold a tier 1 asset towards those reserves, right? It could be government bonds or it could be gold with 100% release of the gold value at the end of June. We think there's going to be a march higher in the metal up to and through that date. Okay? For the simple basic reason that the insane amount of, there's a cause and effect of everything. So we have this insane amount of stimulus that's being put into the system. Something upwards of $8 trillion of what's been done, what's going to be done, what's talked about being done. This all sounds great, but what one of the, squeeze the balloon and it pops out somewhere else. It's a huge influx of capital into banks, which is a liability on their balance sheet, and they have to carry reserves to match against it, right? So if part of that reserve is gold and the price of gold doubles, it takes care of all of your reserve requirements, right? If you're a country like the United States of America that is profligate spending and has massive liabilities on the balance sheet, and yet you've got who knows how many ounces of gold at Fort Knox on the balance sheet, and you allow that price to double, all of a sudden you're balancing your book. I'm just picking a double out of the hat. It could go up more than that. It could go up 50%. Who cares? The point is it's going up a lot from here, and the mining stocks will go up exponentially. Okay, and that's why we keep focusing on this space. So we see what's going on in the futures market. Why is Basel III so important? Well, one way, or the rule that changes in late June, one way to control the price of gold and suppress it is lease rates, okay? I'm not going to go through all of it right now, but at the bottom line is lease rates should go up a lot after June 28th, making it a lot harder to borrow and sell paper gold into the market. This is a theory. We have to see if it's proven by price performance. So let's go look at what the mining stocks are doing. Remember now, you can write this one down. The mining stocks lead the metal. It's not the other way around. So the metal has made a double bottom, testing the lows. Let's go look at what GDX is doing. Making higher lows. Making higher lows. Let's go look at what some of the best names in GDX are doing. Our favorite name, Newmont Mining, making a much higher low. Making a pennant. Sellers came in hard this week, right at the downtrend. If that downtrend breaks, if Newmont can take out these highs, it's going to be indicative of the whole group going higher. Okay? Look at our other favorite names. Franco-Nevada is skyrocketing. Don't forget, I told you guys last week that the royalty plays tend to lead at the beginning of a new bull cycle for the mining stocks. Franco-Nevada, royalty stock. Royal Gold, royalty stock. Wheaton Precious Metals, royalty stock. Okay? Then you get The smaller cap names, they're going to catch up later. Notice how the junior gold stocks made a lower low at the price of gold. So the positive divergence is at the top tier right now. The big cap gold mining names, particularly the royalty plays. So we look for confirmation of a theory, and we're starting to see it. Royalty plays go first. Bigger names start to go up. Then we start to see the smaller names follow. All the while, gold makes a double bottom at a long-term downtrend. Okay, so eyes on for next week. If we get follow-throughs and breakouts, and it doesn't have to be next week, could be the following week. Whenever we see Newmont and these other names really break the downtrend, that's when we can take a bigger allocation in our portfolio and start broadening out into smaller names. Okay, we have to earn the right to take the risk. Now, I appreciate you spending time with me on a Saturday as always. Let's get to your questions. Don't forget, hit the like button for me. I appreciate it. You guys can subscribe right down here if you haven't already. All right, let's go to our comments. First up. All right. Hey, I appreciate that. I should have a bigger following. Amen. Hit that like button. Share these videos for me. I would appreciate it. You know what? I'm just not a marketing guy. Okay. I'm here managing my own capital and working with you guys. And that's what I love to do. So if you want to help me market and drive traffic, I would love it. You know, give a couple links to me when you're tweeting out and send people to this video. Thanks so much. All right. Can you take a look at YTRA? YTRA. Boy, that's a good looking pattern there, brother. What is going on there? India-based company that provides airline, bus, and rail tickets, bookings, and holidays. Well, you know, I mean, I can't argue with that pattern. I mean, I have to do some research on that. I don't really know the name, so I know nothing fundamentally. But if you're talking about the price chart patterns that we're looking for, this is clearly the pattern, right? There's your downtrend. There's your pennant. The buyers and sellers were doing battle right in here, and the buyers won on Thursday. So expecting some acceleration. This is the kind of a name, while I don't know a lot about it, the ARMR report has 4 portfolios: index only, swing strategy, investing strategy, and a day trading strategy. And this might be a name I throw out there on the day trading list, which we share every day for the first 2 hours of trading. I share my trading screen and we day trade together at the ARMR report. All right, what do you got for me now? Oh yeah, PLTR. Let's take a look at that. I was off the desk on Friday. Oh geez, starting to set up, right? It's an innovator name. It's not giving me the outperformance that I'm looking for in innovator names, Kevin. So I only have so much room in my portfolio. And what I'm getting here is lower lows in the stock, and it can't get above the 50-day moving average. So it's a lagging stock. So it's going to be a name that goes onto my day trading list. Okay, because I like the chart setup, and we might get some juice in the innovator type of names, but it's not going to make its way. You know, it's not going to crack the lineup, so to speak, because it's still lagging for me, and that's just how I run money. Hey, thanks about that, Quail. But I could always use a bigger following. You know, we need to get big. The bigger our environment together, the more information we share together, the better we get at this. Hey, Mayor, how are you? Hey, I really appreciate that, Mayor. And let me tell you something. We all want to give Mayor Thacker a round of applause for this call. Okay, this is waste management. This is in ARMR portfolios. Okay, and if you all were watching, this is exactly what I'm talking about. It's if we can continue to build our ecosystem, or whatever you want to call it, our community, right, of ARMR insiders and ARMR subscribers and guys watching on YouTube. You can subscribe right down here. We share information. We use our algorithms. We find ideas. And I think it was early March, Mayor Thacker told all of us on this show right here on a Saturday, guys, take a look at waste management. And then he and I talked about it after this video. We chatted. He explained why this was going on. And you have been dead right, brother. And thank you for making that money for me and all the ARMR insiders that are following our portfolios. It's one of our best performing stocks. So well done, Mayor. The object here is to bring all the information together using proprietary algorithms, right? I'm going to share that information with you. You guys have an idea. We're going to throw it up on the board and see. If it's something I really like, I'm going to do the fundamental research on it. It'll go on the whiteboard. It'll go to the top of the whiteboard if it makes it. And the algorithms tell us when to put money to work, and we make money like we just did and we are doing in waste management. Hey, is to it. How are you? And thanks for continuing to hang out with us on a Saturday morning. Yeah, Hydro Farms. Boy, you know what? You know, if we're going to be buying GRWG, then you could argue that Hydro Farms is a double bottom on the 200-day moving average is a possibility. I have to do more research on this. So purely from a technical standpoint, you could see the pennant that's forming, right? You guys should start building and drawing pennants on your own so you could see what I'm talking about. You connect the tops, right? And you connect the bottoms. You see the pennant forming. And when you break out of that pennant, and I'll probably do a video one day for you guys of the 3 top chart patterns that I like to follow and how I buy them. But the pennant's what we're focusing on today. So if it breaks out of that downtrend, you know, the sellers are out of ammunition and the buyers start to charge, you could argue you could buy that. But I don't love the fundamentals of this business. And it's why it's kept me out of the stock. But because it's all the way back down towards its offering price, maybe I need to give it another look. So I will, and thanks for bringing that up. I'm going to write that down in my notes as a possible investment, not just a day trade. Okay. What's next? Thank you for that. I appreciate that. Moving on. I'm trying to educate. I don't need a bunch of uneducated sheep. That's true. But what this show is all about, the reason I started the ARMR Report is to help people. You know, I've been doing this for a long time, and I thought I would just share the successes and the failures I've had over 3 decades, and hopefully, you know, increase your success at a faster rate than it took me. Is that Cyrillic? I love it, man. Nice to see you guys. OLED. Oh, Sean, you're all over it, brother. I like OLED. And I'm afraid I missed the entry. Ooh, I didn't yet. Yeah, OLED's a really interesting story, and I followed this for a long time. This is the pattern I see in OLED. And it's so funny you mentioned this, Sean, because it almost made it into the ARMR portfolios. It almost did. I went with some other names. I didn't really have the room. 1, 2, 3, 4, 5 up and out. This is a 5-wave pattern in a rectangle. 1 up, 2 down, 3 testing, 4 blown out below because of the collapse last year, but that's okay. I'm drawing it right here. You connect as many bottoms as you can, and then you look at why did it break down below it, and if it's an exogenous event, you don't want to move your line down here. It doesn't make any sense down there. That was a pandemic. The real buyers are supporting the asset right there. They supported it here. They supported it again here. It consolidated right at the line here, right? So that's 4. And the 5th move out, and now it's making a pattern on top of this rectangle. So it may be something I add at some point. I do like the fundamentals, but it just hasn't made it into it's on the whiteboard. It's just not at the top of the whiteboard. Quail, what's the story? I'm going to probably, I was out of the office off the desk on Friday. I probably would have joined you and put some shares of GRWG in the portfolio, but I don't know, because my favorite thing to do, maybe I wouldn't have, be honest with you. I really wouldn't have, because I'm not buying the stock unless it takes out the high of that big up bar. If it takes out the high of the big up bar, we're going to have a gain. I think we'll get a real breakout that'll be significant. So what I love about Friday's action is it held in the top half of the range. You had a huge up day and a consolidation day. So what we should get is an acceleration on Monday. And if we do, I'm going to be long the asset. What's the story? I don't know what the story. I'm surprised it's acting that well. But I do look. We bought GRWG at $3.50 last year, right? Sold it up around $18, $20, somewhere in there. I sold it primarily because we made a lot of money, and I don't like the management team. And I said, I have other places I can make money where I feel the risk reward's better, and I can have more confidence in the position. Obviously, that was wrong. I mean, I had more confidence in other positions. We made a lot of money in other names, but I didn't have to sell GRWG. The stock went berserk. My biggest problem's management, still is. But they just brought in a new chief financial officer. I love that. He used to be the CFO of Crocs. Okay? So maybe some adults are now in the C-suite, and that makes me more comfortable. And so I'm looking at, so why do I like the name? It's always been a great story. They're rolling up. They're going through America, and they're doing what's called a roll-up. They're finding cannabis supply stores in states that have just gone rec or just gone medical. And the mom and pop shops that have popped up, they're going in, they're taking them over, they're putting their own brand on it, they're bringing the economies of scale, they're giving the mom and pop shares, or they're just buying them out, right? That's a story Wall Street loves. That can go on for years. I love this story. And if the C-suite is getting stronger, I really love the story. So I'm willing to put some money in that stock. We'll see what happens on Monday, whether or not it takes it out. Any thoughts on the action in the last hour? Perhaps it was options related. Yeah, you know what? Let me just say this. Here's the S&P, and here's the last hour of trading. So that's the daily chart. So each bar is a day. Okay. So that was a beautiful up bar. Okay. And that's the melt up. This is a day trading chart now. This is what I share every day for a couple hours in the morning to set up our day trades. So at 318, the rally started, and it ran right to the ATR high of the day, which is my favorite place to sell things when I'm day trading. The average true range high of the day went right up to it. Okay. So Maxim, those of you who follow Jam Croissant on Twitter know what I'm talking about, and Spot Gamma. I'm a huge fan of Gamma Information. I think Brent over at Spot Gamma, who started Spot Gamma, is brilliant. I love him. I love what he's doing at that website. But it's just a piece of the puzzle for me, Maxim. It's like any other piece. I don't overweight it. Okay. I'm not in the prediction game. I think that while you can get excited about Jam Croissant and how he keeps calling exactly the prices. To me, that's very dangerous because eventually he won't call exactly the prices. And if you begin to blindly follow what what any one guy is saying, you're bound to run into a major problem. Okay, because you'll zig when the market's zagging, and you might get, not you specifically, Maxim, one might get buried because they won't really know what's happening. Whereas Jam might be doing something totally different. You see what I'm saying? He might say one thing and then he'll end up changing his positions quickly. So you have to, I don't really care what the reason is the long-winded answer to your question. I don't care. I don't care if it's options related because I'll never know. I don't know. Who knows? I don't want to get lost in the weeds there. All I want to do is look at the pattern and say the risk monitor and ARMR portfolios got aggressively long right in here. And now we're making money. And that's the strategy. It's a probability algorithm. It uses confluence. So what's the difference between what I'm doing and following options information and gamma levels and trade? The ARMR report is about taking a lot of pieces of information, writing it into an algorithm, and saying the probabilities are at their highest that things can go up from here. That's where we are right now. And I don't worry about anything else. I just follow stops. I have a stop loss discipline. If the whole thing reverses and implodes next week, we'll go to cash. And it won't make a difference if I knew why it's reversed. I don't care. I'm not going to sit around and try to figure out why it's happening. This is a real, I'm really passionate about this. People spend too much time on the why and not about how do I react. And they become deer in headlights because they think they figured out the why. The market does something else and they just think they stare at it. I don't know what to do. So the ARMR report, what I'm trying to do here is say, look, it's a 3-stage process. You build your whiteboard. You use your algorithms, which incorporates gamma information, okay, to commit capital when rewards at its highest, probabilities at their best. Then you use stop losses to protect yourself instead of trying to figure out why. Those are my thoughts. Hey, thank you so much. Yeah, hit that like button, guys. I appreciate it. Constantine, great question. Is that a joke? Elon said they're going to the moon. I don't know what that means. Are you talking about Tesla? Tesla stock's looking pretty good, isn't it? That thing pops up here, breaks out above here. It's going to help the ARK fund break out. I don't know. Am I going to own this stock one day? Maybe. You know, I own shares of Ford and I own shares of GM. Maybe I should just own shares of Tesla and call it a day. I don't know. Let's keep going. What time is it now? It's 12:30. Got to wrap this up. What time frame are these charts and what software are you using? So you're looking right now at a day trading chart. Excuse me, I'm sorry, a daily chart. This is a daily chart. Let's take a look at, for the fun of it, Square, which we added to the portfolio last week. Okay, so you're on a chart. This is, each bar is 1 day. Okay, and the software I'm using is TradeStation. And I've been using TradeStation for literally 30 years through all their iterations. This is a day trading chart where each bar is 3 minutes. Hang on a second. Hey, Rob, I got to call you back, all right? Yeah, no problem. All right. Let's see what else we got here. 1 day is written. Okay, great. Try to skip through faster. Take out the high of Thursday in GRWG. Do you mean close the daily candle above or just a brief? Okay, so that's a good question. The way I like to trade, if I'll go over to the daily, this is the daily chart, right? So in order to hold it overnight, it's going to have to close above the high of that bar, close above the high of the bar. But the way I'll be day trading it with ARMR insiders in the day trading room is following our day trading strategy. And let me show you what that is, okay? On this particular day right here, so each bar is 3 minutes. Okay, so let's look at this big up day, and I'll show you how I'm going to be trading it every day next week until we get a resolution one way or the other. Okay, this line right here is the line of demarcation from the prior day. So this is Wednesday's prices. This is Thursday's prices. Okay, this is the ARMR volume weighted average price, VWAP. This is the ARMR PMP, price movement profiler. This is our day trading algorithm, all these lines that are drawn. When the asset price goes above prior day's VWAP and top day VWAP, and that happens to match a key spot gamma location, that's when we get moves like this, okay? Explosive moves like this. So what I'm going to be looking for on GRWG is we closed above the VWAP. So let's say the thing opens higher in the morning and it's above prior day VWAP, and then it goes above the top day VWAP. I'll be putting a position on as it's taking out the highs here, okay? And then what I'll do is use a stop that makes sense to me. I can't tell you what that'll be right now. It depends on how it paints on the chart. ARMR insiders who are joining me in the day trading room, they'll see me do this and we'll talk about it. And I'll say, okay, here we're on the position and this is what the stop is. This is how I share my day trading screen with ARMR subscribers who are day trading with me. And I'll say, okay, we just got the day trade trigger. This is the stop. Let's see what we can get out of this. If it rallies all day, we might hold it overnight and make it a swing position. Okay, that's how I'm thinking. What else you got for me? What do you think of sand? Oops. Sandstrom. Yeah, this is another royalty play in the gold space. And look how it's outperforming along with the other royalties, right? It's already popped above the 200-day. That's a great idea. I should add that to my list of things I might want to own in the gold space. There's a couple of smaller royalty plays that I might want to add. I think, isn't OR? Let's take a look at OR. OR. Yeah, OR is breaking out too. The royalty plays are going to lead. And this is part and parcel of a new bull market. The royalty plays go up first. Shark. Okay. I'm a big fan of Kratos. We own this in our portfolios, full disclosure. And I've traded and owned this stock on and off for years. Okay. I think this is the best defense company, you know, bar none. It's a small cap defense name. The CEO is brilliant. The last company he ran and managed, he sold to Lockheed Martin. And I think he's going to do it again with this company. So there's a huge base breakout. The first pullback to the 50. Love this name in ARMR portfolios. Already in them, right? Full disclosure, I already own it. ChargePoint. I don't have any I don't have any fundamental opinion about ChargePoint, and it's not my favorite pattern. It's really not my favorite patterns. I don't have much to say there. All right. Did you say Basel 3 was the name of the? Yeah, it's Basel 3. Yeah, Basel. I think it's BAS. I don't know exactly how to spell it off the top of my head. I think it's BASIL or BASEL. I don't know. Basel 3. I can't remember right now. But anyway, yeah, that's what it is. Nick. Hey, Nick. How are you? You see a massive cup and handle on gold. Yeah, we could definitely do that. We can look at the monthly chart. It looks pretty phenomenal. So that's what you're looking at there. I'm going to take these off the screen for now. So what Nick's saying is we have a huge cup and handle. There's the cup. This is just a pullback to the uptrend, which is going to be the handle. And then when we blow out above, you know, what is this, you know, 180 again on GLD, you know, the sky's the limit. I totally agree with you, man. I totally agree. I mean, the same thing is true with silver on a massive scale. Take these off for now. I don't know how to. I'm trying to find this isn't the right pattern. But anyway, gold, you're absolutely right on gold. Okay. But until the handle gets formed, Nick, and until it breaks the top side of that handle, it's not a handle yet. So we got to see some upward movement, and we find it first in the mining stocks. I'm looking for the mining stocks to really, if the mining stocks could take out the high of this bar, so if GDX can go above the high of that bar, you'll get a 3-bar reversal right at the trend line, and that'll be real bullish to me. What's the high of this bar? Looks like 36.28. 36.28 on GDX. If it takes out that high on a closing basis, that would be 36. Where is that? 36.28. 36.28. It's not that far away. That would be huge. If it takes out 36.28, it's game on. Do you find interesting yet? Yeah, Tech Monkey. Deb, how are you? I find it interesting, and I find them all interesting. I do like Columbia. I do like Columbia. But there's your pattern, right? So I probably wouldn't be a buyer of Columbia until it closes above the downtrend. So this was a big up bar. It's consolidating. And what we want to do is see another big up bar that takes it out of the downtrend. That's the day I'll get long. And the reason I do that is then I'll know exactly what my stop is. It'll make total sense to me. If it has a big up day Monday, let's say, and breaks out, then the lows right here are set, and that's my stop. So now I know what my risk is, and I think the reward could be open-ended, and I'll put money to work. Thank you for that, Peter. Lumen, are you asking me about this right here? Okay, so we put this into the portfolio on this day, the invest portfolio, and it hit the stop the next day and we were out. Sometimes that's going to happen, right? I thought this was a little cup and handle. I thought maybe I want to go there. It immediately fails and we step out. Okay, so this was gone even before, I think it was even before the end of the day we were out of this trade. Maybe not. I think it was 94 cents was our stop. That was the end of the day. Yeah. We got stopped out right there. So for right now, that pattern's dead to me. I'm not going to get long that stock right here. What would I do with gold? Barrick's not my favorite name. You can see why. It's underperforming all the other names. It's just underperforming. I've never liked Barrick. Okay. But there's the long-term trend line. And it's holding it. And it's making the double bottom. And there's nothing wrong if you happen to like Barrick. But I don't like Barrick for a whole host of reasons. And I focus on other names. It's opportunity cost of money. What about Disney? Yeah, Disney's a great idea. I just can't find room in my portfolio right now, but maybe I should. I'm going to write that one down. Let's make sure I look at Disney again. That's the kind of stock that would go in the ARMR Invest portfolio. We added Netflix last week to the ARMR Invest portfolio right here. And truth be told, KB, I'd like to own Netflix and Disney. I don't think it's one or the other. I think they're both going to be dominant players and for the same reason. So I love both stories. And maybe I'll find some room for Disney next week in the invest portfolio as it makes a double bottom at the 50-day. I think you're right about that. And if the Dow and the S&P are going to accelerate, I don't think they do it without Disney. So thanks for bringing that up. Oh, look at McEwen Mining. Oh, you're onto something there, William. MUX. Let's put that on the day trading list. That looks sweet. I haven't looked into that business in a long time, but these are some of your smaller names that if we keep getting paid on the bigger names in gold, these are gold stocks, guys. If we get paid on the bigger names, we could start spreading out. Good morning, Eras. IHRT. Those of you who don't know who Eras is, he is an honorary ARMR analyst. Longtime insider, totally understands what it is we're doing and adds a lot of quality ideas to our Slack trading room, where all insiders share information all week, all day. Actually, 24 hours a day, it seems. All right, iHeartMedia. I'll take a look at it, Ayers. I mean, I know nothing about it. I certainly like the chart pattern. That looks like a nice cup and handle on a very, very tiny level. So I'll have to do a little bit of work on that. I'll write that down. ID Doc, EGO. Yeah, I'm just not a big fan of Eldorado. I never have been. There's just other names I'd rather own, Mo. But you know, there's just other names I'd rather own. What can I say? But if you like it, you know, and the group breaks out, I'm sure it'll go. And thank you for that. Love the shout out. All right, what do you think about Jay-Z and Live Nation behind it? Well, I mean, you can't argue with that, you know, strength, you know, but the chart pattern says it all. So until price starts to, you know, Deb and everybody out there, guys, I come up with a theory. We all come up with theories. This is the first stage of ARMR investing. Get it on the whiteboard, get a theory. And then you've got to have price action confirm your theory, or you're just wrong. And what you don't want to do is force your will on the market. That's the problem. So interesting idea for the whiteboard. Let's follow it. If it ever sets up a price pattern where it looks like the bulls are starting to get in control and the bears are running out of ammunition, that's when we take a look at it and consider putting it in the portfolio. NTLA. Not a bad pattern there. I don't know much about it, but I'm going to write that one down for the day trading list and do some research. NTLA. I know I have it on my board to go over. I just never quite get to the research end. Hey, sounds good. Is to it. Whenever you're ready. Glad to have you on the weekend. Glad to have all of you on the weekend. You guys don't realize this perhaps, but you help me, you know, as much as I'm helping you. You really help me focus my thinking. You get me ready for the week by talking like this, by reiterating how to run money correctly, by reiterating that we don't want it to force our will, right? And at the same time, when we see the algorithms get confluence, we've got to put capital to work no matter what we think the reason is. I don't read tea leaves, try to figure out, well, maybe this time I won't do it because maybe it's this. I've been through that. I've been doing this over 30 years. I've gone through that period where I thought I could guess which risk-on signals to buy and which ones to avoid. And I guarantee, I'm not guaranteeing, I'm telling you for a fact, I would always choose the wrong entry points and load up on the wrong entry points. I mean, load up on the wrong ones and avoid the great ones. I mean, so the ARMR Insider way, build your whiteboard, follow the algorithms, right? When they tell you risk on, put capital to work. Use your stop losses to protect yourself, rinse and repeat. Easy to understand, easy to execute. Long-term, we build net worth together. Thanks so much, guys. I'll see you next weekend. And of course, sometimes during the week, I'm going to be sharing some of these exclusive ARMR Insider videos with you guys on YouTube. So as always, don't forget to subscribe right down here so that you're part of that flow and you get an alert. All right. Have a great weekend, guys. And I'll see you all next week.